My name is Gordon Robb. I am CEO of ESGold. ESGold is unlocking near-term production, generating cash flow from the Montabon project, 80 kilometers west of Quebec City. We are a low capex, high margin model that with a scalable approach.
Gordon, good to see you. We obviously know you from Scottie Resources, but here you are at a new gig. Tell us more. Why are you there?
There's certain opportunities one can't pass up. ESGold was one of them. Working at Scottie for the last few years has been a great introduction into the resource space. I was very fortunate to have great mentors and a great team to work with and learn from. When I was approached from the team at ESGold, they were looking for somebody young to come in that was well-rounded in the resource space, had financial acumen, which I do possess from my past career, and take this into the next level.
Okay, that works for me. Let's maybe I think it's important for people to understand a little bit more about what you're doing in the past in terms of that kind of financial acumen, etc., and I guess market reach for ESGold. Tell us about some of the other than Scottie. Where were you before?
My past experience, I was a fixed income trader. So I worked in Toronto, Hong Kong, different financial centers of the world. So dealt with big executions, dealing in fixed income, different currencies. It's moving back to Canada. It was what I was going to do next. And I got into the resource space. A bid's a bid, an offer's an offer. And Brad Rourke was incredibly generous in training me up in this business.
Right. Well, okay, what have you walked into? So I always ask people when they come into a company, so, what problem have you come in to solve?
It's a good question, right? This team has been very dedicated for the past few years. This is not a new company. It's been operating for probably about the past 15 years. The chairman has been involved with this, saw an opportunity in Quebec to reprocess the tailings, an environmental liability on surface, and get into cash flow. The issues that they were having was taking it to that next level, getting the right people involved. This has been a very tight-knit group that has been working diligently on this project and this project alone. They needed to break into the resource space, to bring in the right partners, bring in the right people, to get it across the finish line and get it into production.
Okay, so what assets has the company currently got? What are we looking at? You've got Montabon, obviously. Tell us a bit about that and maybe what else, what other assets they own.
So Montabon is the primary asset. It was a past producing mine, early 1900s, like we're talking 1912 up until 1940. Again, in the 80s, it was predominantly zinc. A little bit of gold and silver in the 80s and the 90s. Now, what this did is it left a lot of tailings, a lot of toxic tailings. We're looking at about 1 million metric tons throughout the township of Montabon de Notre Dame, right? The township was built around this mine. So what we're planning on doing is going in, cleaning up those toxic tailings piles around this community, employing the people to do so, and generating that economic value from the gold and silver and mica left in those tails.
Right. Okay. So what do you expect to be able to extract precisely? I mean, and what work have you done to try and understand that?
There's been a lot of metallurgical work, right? We have a database of drill results in this area. This has been 3 different companies that have operated in this: the Anacom, the Tetralt. So there's different areas that have been mined. About 6 different tailings piles. We've done the met work, we've done the geological work, we've really understood the processing that's going to need to be taken place to be able to extract that economic value.
Okay, so you've done some work. And when was the last time this, so in terms of, I guess what I'm getting to is, what are the things that you need to get over the line to be able to kind of get after this thing? Is it fully permitted and licensed?
We're fully permitted, fully licensed. We're permitted for up to 1,000 tons per day. What we need to do to get over the line is bring in that last partner, right? Get that last little bit of development financing done. This is a low capex project. So we're not looking at the 20, 30, $40 million project financing. We're looking for a partnership to bring in about $6 million in capex, about $2 to $3 million in operating expenditures. And that should get us across the finish line into full production.
Okay, and so not much money left to get. What do you have to do with this money in terms of the pilot plant? No, well, sorry, is it a pilot plant? Because you already got an existing steel building. So what does that do for you?
We're going to start with a pilot plant of 500 ton per day and scale up to 1,000 ton per day. Right. Our plan is to start slow, do this properly, rather than rush in to do it to make a big splash. The whole point of this is a organic, slow approach to reprocess tails, start generating revenue, and expand at scale. So as we hit that 500 ton per day, we'll be profitable, expand into 1,000 ton per day, and start taking that money that we're generating and putting it back into the ground for further exploration.
Okay, so and you've got a current updated PEA that you're working with?
We do. We're expecting that soon.
Okay, so therefore you're not going to be able to talk about some of the assumptions that you're making in there yet.
I would like to. I think we're still a month or 2 months away from that updated PEA coming in. It's always dealing with third parties. You never really know the exact timeline, but we're eagerly waiting that updated PEA.
Okay, I guess what we do know is the price of the metals will have changed.
Yes,
it'll be down to you to demonstrate, how much has changed in terms of the economics and underlying costs. What are you trying to extract precisely? Into which metals are we looking at? And have you got a sense of what the ratio is?
We do. So what we're looking at is approximately about 12,000 ounces of gold in the tails, approximately about 1 million ounces of silver in the tails, and a significant amount of mica. So what that does is that gives us enough revenue generation to really expand at scale and then tackle the hard rock resource that is at surface from a surface crown pillar. There is a lot of mining potential, but we would like to start with that original tailings of cleaning up that toxic material that surrounds the township.
Okay, now we're getting into it. So this is not a tailings company per se. There is some exploration that you will look to do once you generate enough cash from the tailings. Is that the plan?
Absolutely, right?
Right.
Well, we'll start with the tailings. Our plan is to remediate the area, right? Is to reprocess those tails, to neutralize that cyanide, to make an aggregate that's safe and cleans up that environmental liability. But we are on a VMS deposit that is wildly underexplored. There was production here. It went down not very far at depth. We've recently done an ANT survey, ambient noise topography, that went down to 1,200 meters, and we're still finding structures. There is a lot of exploration potential. And the bonus here is that we'll already have a functioning mill. So that we skip that whole development stage as we continue to explore.
Right. So we'll come into that in terms of drilling to kind of test these deeper zones off the back of the ANT survey, but in a second. Why start with that? VMS, right, Paul, but surely you can get sort of funding to get after drilling, because drilling seems to be where the leverage is, where the interest is. Why not start with that?
No, Matt, it's a good question, right? I've been in this space for a little while now, and the explorcos in this industry are depressed, right? Companies are continuing to get beat up. It's a difficult position to be in, of the constantly going to the market to raise money. You have a great hit, and you still don't get the recognition in the market. The market seems to have an appetite for cash flow. We have never seen metals prices as high as they are, so we're going to take advantage of the situation we're in. We're going to produce what's on surface, take advantage of those high metal prices, and be able to fund our own drill program by cleaning up the area and that toxic liability.
Okay, so when we'll get to what that quantum could be off the back of PEA. Now, look, tailings, we've got a few clients who are tailings specific companies, and they just kind of move from one asset to the next and say, I'm very happy with their lot. It's very simple. Can you build or get an FID off the back of this PEA?
Sorry, can you explain that one more time?
So I'm saying, because of the simplicity of tailings, right? It's sitting there at surface. It's heavily de-risked. You're not like drilling and digging this stuff up from underground or digging pits, etc. It's cheap. It's easy. In terms of the processing, can you sort of explain what you're going to do, and when are you going to do this, and do you need more work over and above the PEA to understand that?
No, it's a good question, right? So what we need to do is essentially pick it up from the side of the road, right? We're doing gravity separation to be able to separate it. The metallurgical work that has come back has been very positive from the process that we plan to be using. We have a great team on site that has been working on this, again, for the past few years. So the steps that need to be taken is just getting that last little bit of equipment in. We have our building standing. The infrastructure's in place. It's right next to the township. Most of the boxes are checked before we go into full production here.
Okay, so let's be clear. So that's the focus at the moment. Into exploration, which I want to talk to you about in a second, in terms of potential, etc. You've got a sense of what you want to do, but you're not going to go out to market and raise money specifically for exploration at the moment,
No, no, we're
or
not.
are you?
No,
Okay,
our
fine.
focus here is to get into production. That is our primary focus, is to get into these tailings piles, get into production, start with that 500 ton per day, move up to 1,000 ton per day, and then focus on exploration after that. Is we have about 3 years of running room from the tailings that are on surface, as well as the hard rock resource we know is already there. We have some time to be able to build out our exploration team and fund an appropriate exploration program that this project deserves. We're not going to be doing this two-tiered. Is we're going to be focusing on this one step at a time, and our first step here is getting into production through those tailings piles.
So talk about the team structure then, because obviously, if you're not going to be doing drilling, will you still have explorers, geologists on site doing some basic work, or is it 100% back to this tailings processing?
We'll have some geologists on site doing your regular geological survey work, exploring the property. We have a great geological team. My primary focus is getting this up and running, but there is always that work you need to do to be able to understand the asset, be able to chase veins. We're analyzing a lot of the data as well as the past drilling that has been done on this project. The majority of it was production drilling, but getting that into a system using the ANT survey along with our VTEM survey to be able to build a 3D model. There's a lot of background work being done to really understand the deposit and the project, but the primary focus is getting this up into production.
Okay. Okay, fine. Understood. Now, you've had a good reaction in the market this year off the back of what, telling this story, presumably?
I would imagine so. Is the market seems to have an appetite for cash flow. We're a near-term producer. We're going to be in cash as soon as possible, but we need to get up and running. Like I said, there's a few more steps that need to be taken just to get us into that final stage before we pour doré bars.
Right. Okay. So, given you have a nice reaction in the marketplace, and you're relatively new, when did you come in?
I started in July 2nd.
July 2nd. Okay, you're really
I'm a
new
month
to
in.
this. Month in. Okay, and I'm giving you a hard time. So, so it wasn't my fault, I promise. So let's look at the kind of fully diluted capital structure. This company's been around for a long time. Are there any kind of legacy issues that you're sort of conscious of having to clear up, or rotate shareholders out and get new shareholders in? Let's look at the kind of corporate structure setup and what you're going to do about it.
It was something I looked at before I joined. Like as I mentioned earlier, that this company was started by a select group of individuals, small group. This has been mostly funded by friends and family of the chairman, who saw an opportunity, got his friends and family together. I was recently in Montreal, and I got to meet all these individuals, these people that have been bootstrapping this company for the better part of 15 years, of wanting to see this work, having faith in the team and the group that was working on it. But this is mostly held by friends and family. It is a very tight capital structure. We have some strong family offices out of the US. But again, this has not been touched by any of the institutions, has not been touched by any of the banks at this moment. Right now, this has been run essentially like a family business and been funded the same way.
Okay, and in terms of, are there any warrants out there at the moment?
There are warrants. There was a lot of financing done a little while ago, but all those warrants went to past shareholders. So all of those shareholders all the financing that have been done, it hasn't been open to the market. It's been done with that same group of close family, friends, and those family offices.
So how does that affect you? Obviously, liquidity is going to be an issue for you, and you talk about a sort of 2 to 3 year timetable to kind of getting to the point where you're processing these tailings and generating capital, which will then kind of release you. It's kind of like a slow burn here. Are there any components to this story which you think might get some traction, get a reaction in the market over and above, here's a process we're going through to extract value from these tailings?
Yeah, I would say that when you said 2 to 3 years out, I would say we're a lot sooner than that. Right? We are a lot sooner than that. Now, I don't like specific timelines. There's a lot of work that needs to be done. Is working on the team, working on the structure, working on those partnerships. I want to make sure that everything's done and not rush a timeline for the market and overpromise something, underdeliver. We've seen mistakes like that made in the past in this space. I want to make sure this is done appropriately and responsibly. But when the market gets an idea of our timelines, we are going to be in cash sooner than most.
Right. And the team who are doing this kind of build out, sorry, are you bringing consultants in, or do the existing team know how to do this? Have they done it before? How do we ensure that there are no delays?
Oh, it's a good
Given
question.
that
It's
it's a relatively simple process, but how do you stop things falling
yeah.
over?
We do have consultants working on this. We have a significant amount of consultants working on this. Paul Massimano, the chairman, has been on this project for about 15 years. He's very competent. He is our COO. He's making sure that this gets into production. And we have the right people in the right positions that have the experience to do so.
Okay. Okay. So, in your cash position, you did a raise a short while ago. You good for everything in terms of the G&A, and it's just a question of kind of closing out the funding for the plant, etc.
We're
Is
fine
that
on the
where you're
G&A
at?
side. The last finance that was done was for some equipment as well as G&A. Where the majority of this financing that I'd like to do comes from would be an offtake partner or a partner without giving too much equity away. We can fund this on debt because we're so near term. It puts us in a very advantageous position rather than going out giving half the company away to put into development costs. Is we can fund this on debt with a responsible partner that will help us get across the finish line and be able to pay back that debt very near term.
Meaning it's a relatively cheap form of capital,
Very cheap
is what
form
you're
of capital in
suggesting.
a very
Okay.
high cost of capital environment.
Right. And what does the previous PEA tell us in terms of the kind of payback at whatever number it used back then?
I believe it was less than a year.
Okay.
Previous
And obviously prices have changed since then.
metal prices
Okay.
have changed dramatically in that time. Yes.
Yeah. Okay. Okay. Fine. So what are the things that you're looking at? Say, look, guys, we can't afford for these things to fall over. What's the kind of focus and concern from you?
Funding the right partner, bringing the right partner
That's
in
it.
here is that's it.
Okay.
Is we are again in a very good position because we have the cash. We get to look at the partnerships out there who we want to bring into this to be able to take it across the finish line, and who we want to tie our wagon to. Right? This is a very exciting position for the company to be in. So close to production is where we just need that last little bit of development financing before we push this across the line.
And what about where do you think where do you think value is actually generated in the market? I know you've said a lot of explore codes putting out good results and they don't get rewarded at the moment. So is there any part of you that thinks, and given your financial background, you kind of forward sell some of this production at a certain point to get some money in to get after the exploration bit? Because that's the kind of big blue sky growth component to your optionality here.
The blue sky, the big exploration, the big deposits are always what changes the market, right? Is good drill holes, while they are being ignored, is those massive deposits, those massive discoveries are groundbreaking. Now, in an ideal situation, yes, we have a district scale opportunity in front of us. We plan on funding it ourselves. But what we want to show is that this is a scalable model. That we can go in, we can clean up an area while generating the economic value, not just in this tailings pile, but in tailings piles and tailings facilities from past producers throughout North America and South America.
That's a different kind of company profile, right? So are there companies with tailings nearby?
There is. We've taken a look at some numbers on this, but
Okay.
Montabon we'd like to be the first project, and it is our proof of concept that we can
Right.
clean up the area, generate that economic value, explore, build at scale, and move on. Right? Is that self-funding environment of being able to explore and find those massive discoveries that the market does appreciate, rather than just drilling good holes, raising from the market, drilling more good holes. Is we get to self-fund our exploration program and take a big shot at that blue sky potential.
Yeah, okay. Well, that excites me more than trotting around North America trying to find more tailings, because it's kind of fairly flat return profile on that sort of stuff, and quite frankly distracting. So that's good to hear. Okay, well, like Gordon, I mean, nice to well, congratulations on getting the role. First of all, I wouldn't be a CEO of a public market company for all the money in the world. So we're very proud of you, and we look forward to maybe seeing you as things progress. So what are the kind of immediate sort of things that we should be looking for over the next 6 months? Obviously, I think financing might be a big part of that.
The financing that solidifying that partnership for the next step, yes, as well as the updated PEA should give us a really good idea of what's in store for this exciting project.
Beautiful. Okay, good luck with that, sir. We'll see you soon.
Matt, thanks very much for having me.